Welcome back, investors, to Ticker Time News. I'm Adam, and embattled connected fitness equipment maker Peloton, ticker symbol PTON, is back in the headlines. But this time, the news doesn't revolve around eroding demand or production shutdowns or its overall fall from grace. Rather, the company has become a potential acquisition target, according to the Wall Street Journal, which reported last Friday that Amazon is among a group of possible suitors. Stoking the M&A fire, the Financial Times followed up with its own article stating that Nike may also be interested in acquiring Peloton. Is this just a coincidence? Maybe. Okay, before we get too far into all of the Peloton news, smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if you're new around here and it's your first time watching, then click the subscribe button so you never miss a video. All right, thank you, my friends, for doing that. So, is it a coincidence? Well, it's likely not a coincidence that the rumor mill is spinning shortly after activist investment firm Blackwell's Capital called upon Peloton to put itself up for sale. Remember, during our January 24th After Hours live stream, we reported that Blackwell's Capital had sent a scathing letter to Peloton's board of directors, saying that the company is in worse shape now than it was prior to the pandemic, which doesn't seem like it should be. The firm also asked for the removal of its CEO, John Foley, listing poor forecasting abilities as a key problem, among several other grievances. With the stock having cratered by nearly 85% from its highs reached in early 2021, Peloton is clearly in need of a shakeup, and a takeover may offer the quickest route out of trouble. Peloton's current market cap of around $9.5 billion makes a transaction much more feasible, especially for a mega cap company like Amazon, that has $42.1 billion in cash on its balance sheet. Based on the stock's spike higher, it's evident that investors are confident that a deal will materialize. It's worth noting, though, that short interest is quite high in Peloton, at about 12% of total float. Therefore, today's move is also partially fueled by shorts covering their positions. However, I also believe that odds are in favor of Peloton being acquired for these reasons. Number one, Peloton has a large subscriber base of 2.8 million users, and it's still adding new users at a fast rate, at 66% in Q2. It's not hard to imagine how a company like Amazon, Nike, or even Apple could leverage that subscriber base to create significant revenue synergy opportunities. For example, Nike could cross promote its running shoes and athletic wear to Peloton subscribers through various channels, including during workout sessions. Or it could bundle its products with new subscriptions. Two, although turning Peloton's fortunes around would be a major task, the companies believed to be interested in Peloton have both the resources and the top flight executive teams to execute a successful recovery. It's also notable that running and fitness have become focal points and areas of strength for Nike since the pandemic hit, while Amazon has also bolstered its exposure to health and wellness. Three, from a marketing perspective, Nike or Apple's mass appeal would help heal many of the public relations hits that Peloton has sustained over the past 2 years. The most troubling incident involved the fatal death of a child on Peloton's tread product, an episode that the company initially denied responsibility for. Ultimately, though, Peloton made the correct decision and issued a product recall, but the damage had already been done. Number four, the initial cost to right-size Peloton through production and personnel cuts would be substantial. Once those efforts are completed, though, a company with the size and scope of, say, Nike could drive production and logistical efficiencies that weren't just available to Peloton. The main takeaways are that Peloton is ripe to be acquired, and it seems more likely than not that a deal will be hammered out. It wouldn't be overly surprising to see private equity firms enter the fray as well. Now, there are potential roadblocks, such as regulatory concerns for huge tech companies like Amazon and Apple. In the end, though, I believe that Peloton's huge user base and attractive valuation at 2 times estimated forward sales will be too tempting to ignore. On a final note, Peloton is set to report earnings after the closing bell on February the 8th, setting the stage for a very interesting earnings call. Well, that's what I think about Peloton right now, but I want to hear from you. Who do you think would be the best company to take over Peloton and have the most interesting synergies? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if this is your first time watching, click that subscribe button so you never miss another video. Thank you so very much for watching, and I will see you in the next video.